Good morning, everyone. Welcome to the modern market, where every day we discuss everything to do with the modern market. That is the crypto market, the NFT market, and any other market that is flying. And there are a couple that we'll be speaking about today. Loaded up for discussion today, we have the Infinex raise hitting $65 million for decentralized alternative to a centralized exchange. Hope you heard about that, at least. If you haven't, or if you're curious to know more, we have the lowdown for you. Next, PayPal enables US business accounts to trade crypto. I think that's pretty significant. And finally, crypto majors steady whilst memes melt higher. Huge action across the board there. Cannot wait to get into that discussion. We've also got the latest on price action on crypto and NFTs, and a discussion on whether or not Coinbase and Base is good to build on versus some of the other, let's say, more competitive chains at the moment that are really going out there trying to win business. Been a few examples of them winning business recently. We'll get into that, so stay tuned for that. Today we have got Sam and Rahim in the co-host seats. Cannot wait to get into it with them. We're ready to in just a little bit, but before we do that, just a reminder, friends, that nothing that we say here is financial advice. This market is very risky, and we don't know anything for sure, so please proceed with caution and exercise your own judgment. With that out of the way, Rahim, welcome to the stage, my friend. Good to have you with us. It's not often, but when it is, it's always a good show. Had many compliments of you being with us the last time you joined us, and it's nice to see you after just being with you in Singapore. How are you doing, my friend?
I'm fantastic. Thanks for having me. It's always such a pleasure to just like sit with you guys. I was just thinking like it's pretty crazy. I saw you a couple of days ago in London, then I saw you in like Singapore. Isn't it like just wild? We get to see each other like around the world in such a small span of time. So it's awesome to be here. I'm excited.
Yeah, I'm getting quite dubious. I'm getting quite skeptical of this lifestyle. Like, are we really doing business, or are we just going on holiday with our friends every now and again? Like, I don't know if there's, I mean, I think there's business going on. I'm pretty sure there's business going on as well. Sometimes it does seem a bit too fun, and I'm kind of suspicious of myself. Do you ever question yourself, Rahim?
I feel like this is the corporate side of you that's like knocking in your head and being like, this is not the way to do it. And I'm like a big believer, like, don't let like the world or like the traditional world tell you like the way you're doing things is the wrong way. We had this discussion of you talking about how your last trip to Art Basel ended up like, building connections, and helping you with like, your business aspect of it. So don't gaslight yourself. You are doing it right.
I kind of like gaslighting myself every now and again, but great to have you with us, man. Look forward to discussing these topics with you today. Sammy, nice to have you with us as well. You've been doing a little bit of holidaying in Italy. How's it going, my friend?
Yeah, it's been very hard to detach. Obviously, seeing the timeline, checking in, make sure I'm still on top of stuff, ready to get back sort of next on Monday or so. But yeah, Italy's nice little break. It's warmer weather apart from two days where it's absolutely pissing it down with rain. But outside of that, it's an improvement on the UK, which is good.
Well, I can tell you, after arriving this morning at 5:30 in the morning, coming straight into the research and the snapshot and getting ready for the show, it sucks here. It definitely sucks. Singapore is fantastic, actually. I love the climate. Some people say it's too hot. I like it. I like that kind of muggy humidity. I'm a big fan.
So what you're saying is I should accidentally miss my flight back to the UK and stay out here longer?
If it helps, if it helps. I think it helps right now because being in the UK was not a pleasant arrival earlier today. But look, we've got a big show to get into. All kinds of interesting stuff. A lot of big numbers flying around, both on the capital raising side as well as on the charts as well. So we're going to get into all of that and more right now. Let's start with the price action first. I'm going to start with, where should we go? Let's start with the majors, of course. Going to share my screen for the people who are watching in. Remember, we're live on X, live on YouTube too. Got Bitcoin just up 1% at 64.3K. We've got ETH flat at 2,600 US dollars, and Solana is up just 1% at $152. In terms of the headlines themselves, Infinex completes a $65 million raise for decentralized alternative to a centralized exchange. Someone on Twitter pointed out Infinex raised more than 65 million US dollars with the fairest sales structure the market has seen for years, while building something that could revolutionize DeFi and on-chain UX. I saw a lot of people talking about this. We're going to break that down, what that actually means, if that's actually true, and explain what's going on there, because that's a hell of a lot of money relative to other people raising. So we'll talk about that in just a little bit. Number two, PayPal enables US business accounts to buy, hold, and sell crypto. One of their associates said this. They said, since we launched the ability for PayPal and Venmo consumers to buy, sell, and hold crypto, we have learned a lot about how they want to use their crypto. Business owners have increasingly expressed a desire for the same cryptocurrency capabilities available to consumers. So we're excited to meet that demand now. So that is pretty interesting. PayPal being very responsive to businesses as well, who say they want to be a part of the party. And then finally, as you said, crypto majors holding steady, but memes were absolutely melting. Got Pups up 17%, Mother up 30% after the rodeo party in Singapore, which had already set it moving higher pretty quickly. An even bigger move in the last 24 hours. Toshi up 38%, Whiff up 10%, Mog up 11%. We'll digest some of those moves, and very grateful to have Rahim with us today, who I no doubt participated in some of that. Some notable sales from around the space is Zuki Water selling for 17.5 ETH, Xcopy iRoller 16 ETH, Rafik Anadol, Winds of Yawanawa selling for 8 ETH. That's the headlines and the price action. Sammy, you want to head to our NFT marketplace partner, Mintify? Give us a little bit of a breakdown of what's going on over there.
Yeah, sure. So, I mean, there's been a bit of price action over the past week, but I think the past couple of days we've seen a bit of a cool off with the likes of Azuki, which is kind of down around about 0.85% past 24 hours. Bored Apes are kind of pretty much flat. Pudgy's down about 2%, but I think that's predominantly on a run up in the previous few days. So there's nothing really noteworthy there. However, on the Azuki side, there has been some big sales. So I think Whale made a post yesterday highlighting some kind of so those more rarer traits coming through. And I think there's like I can drop the link in here, or if you want to just quick look at Whale's post, you might be able to show that on the screen. But outside of that, it's quite interesting to see ordinals was cooling off as well. So we saw a bit of a run up in the Node Monks and Puppets over the past week, but that seems to have cooled off a little bit. So I think for me, the one that was interesting was the redacted Remedios fell about 10 or 11% in the past 24 hours, which is unusual because with the likes of, we've seen Mudeng kind of run in the past week or so, capture the mainstream attention. And to me, that's kind of fairly well tied in with the meme culture. So it countered and confused me a little bit. So yeah, I think there's been a couple of movers, but relatively flat for the majors within the NFT space. A little bit of a cool off in the ordinal space, and then the redacted Remedios were down a little bit. So 10%.
Yeah. Fair enough. Good shout out to on the ordinal side. Yes, it's kind of cooled off a little bit. However, remember the context there is that things have ran pretty hard in the last, in the last week or so. Remember that show maybe a couple of weeks ago, where we were looking at those top ordinals at around 6K and just saying that's way too cheap. 6K for the top ordinals is way too cheap. They seem to all reprice higher. I think they're now, in terms of US dollars, they're at least 10K each. I don't know what you think, Sam, on this. Rahim, I'd be curious for your thoughts as well. When it comes to ordinals, for some reason, I just think pricing stuff in USD is helpful. It's exceptionally helpful. Frankly, I remember doing some Solana analysis of the NFTs, and when Mad Lads was maybe 10, there was a period of time where everything that if you were a top collection on any chain, I just thought it should be worth 20. But I'm not thinking in terms of like the native currency. I'm thinking in terms of USD. So I was thinking Mad Lads should have been 20K. I was thinking Node Monk should have been 20K. And then when Solana went to some whatever outrageous price, and I don't know what price that sent the Mad Lads to, I was just thinking, there's no way this can keep a 220 Solana floor. Like, that's just so much SOL that people will look back and be insane for holding that. And I think I sold mine at 150 SOL after buying at maybe 70. Are you leaning in that same direction, Sam? Like, look, forget for ordinals and Solana in particular, are you thinking in terms of the dollar number rather than the the Bitcoin or so on?
Well, I think in terms of an analyst perspective, I think it's easier to compare cross-chain with USD. But ultimately, if you're in a bull market or things are going up, people tend to trade in the denomination of whatever chain that's on. So for instance, when I was trading ETH NFTs like more frequently, I'd be thinking in terms of flipping ETH, so flipping it back into ETH. I wouldn't be thinking about USD. So I think it just depends on the time in the market. So what period it is, because if it's in a bear market, people are wanting to preserve their capital, and whether that's, I think USD is a lot more useful. And then when we have those debates around royalties, people just aren't prepared to pay those in a bear market or if prices are going down. But I think in a bull market, when people are trading within a specific chain, they're kind of maxis on that particular chain. So you have all those Bitcoin maxis like pushing into ordinals, they'll flip it into Bitcoin. So I just think it depends on the participant. Like if you're an analyst like me, I'd probably say USD is probably more useful. But if you're a trader, I suspect stacking the underlying denomination of that currency makes more sense.
I don't know. I'm even when I'm thinking about it from a trading perspective, thinking about the dollar, but I kind of know what you mean. Rahim, any thoughts on this?
Yeah, that's very fascinating, Sammy, because I actually never do it in USD terms at all. Because I feel like for me, like if you look at the ordinals right now, right? So they are running up, their BTC value is going up, and then their USD value is obviously going up as well. But you're not seeing similar rise up on the ETH side. So I feel like in my brain, I'm like, if I'm looking at it from that perspective, I should see that price action across the board. So if USD value is going up, the majors denominated in that NFT should go down. And yeah, like I feel like I don't really see that across the ecosystem. So I kind of like struggle with that. So I see them natively in ETH and BTC. But it's so fascinating how we see it in like such different ways.
But I think it also comes down to like if you have long-term conviction in Sol or in Bitcoin or in ETH, like ultimately you're going to be wanting to stack Satoshis or Sol or Gwei or whatever it is. And I think that to me, like if you're intending to hold that particular asset for a long period of time, then I think you probably will think in that particular asset. But if you're looking to take profits into fiat or into stable coins in the short-term future, then I would be thinking in USD.
Fair perspectives. Just wanted to go around and share those thoughts there. Sticking to the kind of idea of cross-chain comparison, which is what we were doing a little bit there in terms of price action, there was a lot of chatter coming out of Singapore. This is like our first discussion point for today. A lot of chatter about two things. One, which chain is best for kind of building on at the moment? And then also, to what extent do you need to be across all of them? Like, are we moving towards this universe where we need interoperability, or we need shared liquidity across chains? And this is actually, we're going to be talking about Infinex, who just raised $65 million. We're going to be talking about them as a headline a little bit later in the show, and maybe that's kind of related to this idea. But I've got this tweet from Adrian, who is at the Newman, what do you call them? The venture capital team at Newman. He says, a founder in Singapore told me it doesn't make much sense to build on base. Just speculating that you can acquire Coinbase's 70 million user base. He said users of an exchange like Coinbase are there to make dollars, but not spend. From his perspective, they are traders, not consumers. I counter-argued, what about BNB, BSC, chains that founders built on wanting to leverage on Binance's user base? He said, yes, exactly. DeFi are the things that are not consumer applications. And it seemed to be, in his opinion, when speaking to people, that the places that app founders were most interested in were things like Telegram, Solana, Berachain, or Abstract. I definitely had a conversation with a bunch of founders who were very attracted by Solana. I'm not going to lie. I think the way that Breakpoint was executed made people who were not on Solana feel like, oh, that's like a really nice headline event that it would have been fantastic to be a part of. But I also think increasingly people are thinking, well, do you know what? Why don't we just integrate? Again, we're coming on to the Infinex conversation a little bit later. If you don't know about that, it's very, very important. So yeah, what are your thoughts here, Ryan? You were in Singapore with me as well. How did you feel speaking to people in terms of where they wanted to go and build? Did you reach any consensus on this?
I think it's very interesting because I think there's one narrative where we go about that at the end of the day, the consumer doesn't really care about the back end of an ecosystem, right? You're talking about if the product is fun. You look at stuff like Polymarket, which is arguably one of the hottest products right now, and it's built on probably one of the chains that has like the worst optics in our space, right? So I feel like, to me, and this was a conversation I had with like a lot of people as well, and I had very similar experience of people focusing on Solana, Ton, Abstract, definitely. To me, I think this should depend more on the ecosystem support you're getting rather than thinking about the consumer base. I agree with the post in some way where, like, I don't think you should be building as trying to get the Coinbase ecosystem on your consumer app. I mean, some of these people are trading stuff on the centralized exchange. They don't have decentralized wallets. They're not like, yes, they are in that ecosystem, but doesn't mean they're interacting with like consumer apps. I think what's interesting to me with that argument and what you just said about Solana, I feel like other founders champion Solana a lot. So you have like, whether it's like Wormhole, whether it's Jupiter, whether everything's like, Mert is building, I feel like everyone champions Solana a lot. And I think, to me, the reason someone would choose to build on Solana is the ecosystem support you will get from other founders, other products that will integrate in you, rather than looking at it from a consumer perspective. So I feel like, to me, that should be your goal. This is why I think I'm more bullish on, everything like Abstract is doing or Anime Chain, because these chains are built on like not your regular metrics of TVL, but rather that user base. And then if your product is based on like, we want hundreds or millions of thousands of users, you want to go with like smaller ecosystems. I was attending Luca's talk at Token 2049, and he said something super nice. He's like, the biggest problem that he believes chains had is they were trying to accommodate for everyone. You're a DeFi protocol, you're a consumer app, you're a gaming ecosystem, you're an NFT project. And he's like, we don't want to do that. He's like, with Abstract, we are doing pure fun consumer products. If you want to build something on like AI infrastructure, I will ask you to go on a different chain. I don't want you to work with us. So, and I think I like that approach, because now you're trying to like niche out your infrastructure to accommodate to a particular product, rather than always trying to customize that. Oh, how can I change aspects of my chain or ecosystems to adhere to like the DeFi protocol you're building or NFT ecosystem? So yeah, to me, I feel like people have like a natural bias to kind of blame their product not doing well or doing well because of the chain or the back end. I think there is some truth to it, but I think at the end of the day, and I think looking at Polymarket, it's such a good example. Like, the world is talking about it. You have like, it's probably one of the biggest consumer apps right now that normies are like looking into, and it's built on freaking Polygon.
I think that's a great counter to all the founders who are kind of getting their head turned, being like, oh, what if I was there? Wouldn't it be better? What if I was there? Wouldn't it be better? And on some level, I can see why they would have their head turned, because I do think, and I think, Sam, you might be speaking to this in a moment with this Saigar post you just shared with me. I do think ETH has a coordination problem, in the sense that, look, I'm in London right now. If I want to brainstorm, plan, plot how I'm going to go on chain with the modern market in the next 6 to 12 months or whatever, who do I go to? Where do I go? There's nowhere for me to go. Who do I reach out to? No. I think the word you used was community support or ecosystem support or something. Nowhere. If I want to figure out how to do on Solana, there's the Friday meetup every single Friday with the person where they've like built out a team that are going to be there. They've built out a community, builders, founders, investors, like they're there. So there's definitely an issue. However, I also take your point, which is just build something damn good wherever you build it, and people should probably come. So nice perspectives there. Sam, did you want to speak more to this Saigar point?
Yeah, but just on a side topic, just something you said then around just build something that people want. You've seen that with Fantasy Top. Like, I think that's getting a lot of traction. They've really recently integrated with Moonshot. So they're looking to
their latest numbers were great, right? Just to give people some perspective, do you have the numbers with you? Like, their weekly revenue is 6 figures, right?
Yeah, like it's pretty much a sustainable business. Like, they could probably do it without Blast Gold. And I think that is what Blast Gold ultimately wanted to achieve. It wanted to bring some initial users, and then they'll fade out and the app could survive anyway, irrespective. And I think that's something that Pac-Man's done very well, and that the Fancy Top team has nailed. So that's and that's an example where people think that particular chain is dead post TGE, but actually there's a lot of activity happening. It's just not getting the limelight. So I think that, to your point around Polymarket being on Polygon, it's like, well, it's just a good app. Like, people want to use it, and it's been integrated into Bloomberg, so it's got that product market fit. But just to this Saigar post, like he made a comment around that a lot of the stuff that's being built on ETH at the moment, ETH mainnet, is infrastructure stuff. It doesn't necessarily appeal to the mass market, whereas a lot of the stuff that's being built on Solana is that retail focused, app focused thing that they'll actually be interested in. And that kind of leads into the point that you've made about the recent raise, the 65 million raise. Like, that's focused on UX. And ultimately, that's what is going to bring people into the space. It's not going to be the infrastructure, because if you've just got a load of infrastructure with no activity or community or anything like that, or apps being built on it, it's going to be a ghost town. And I think that we will get to that point with ETH, and with all these L2s, you've got activity happening. Like, I mean, Polygon's an L2, that's got Polymarket. Blast is an L2, that's got Fancy Top. You've got each of these individual use cases. But yeah, to an extent, it is fragmented liquidity, whereas a lot of the stuff on Solana is like, there's a lot of apps like Pump Fun, like all these different things are kind of being launched, and it's just easy to use. So I do think that we might see that UX improve over the next sort of 6 to 12 months, but I don't know which apps those are going to be.
Do you know what? You made a really good point in there, which is, I mean, a bunch of good points, but is it a complacency from founders or an entitlement from founders where they think Blast is dead, for example, or it's like, maybe they're wondering, what are we supposed to do now? What are we supposed to do now that the gold is gone? Oh, well, the gold's not gone, but like, the gold is supposed to attract the people, and then your product is supposed to make them stick. Like, I think genuinely some people are thinking like, well, what are we supposed to do now? We're not getting any support. We're not. It's like, you had this titanic wave of people absolutely obsessed with that ecosystem for a period of time. And even if some people didn't get aggressively involved, they would have heard about it. Like, people have heard about Fancy Top. They would have heard about some of these other apps on Blast because of how much lightning in a bottle they captured for a period of time. And I think, yeah, I think that's a very reasonable argument. There's a very reasonable argument to be made, which is something like, you know, these founders just getting too used to these like initial incentives that any chain might be able to provide, whether that's financial or whether it's like in this marketing spend via gold or any other type of incentives, when actually you've got to roll up your sleeves and create a stickier product, I think, as well. Look, I like this entrepreneurial conversation. Funky, appreciate your hand is raised. Might have to swing back to you a little bit later because we've got to keep it moving today. We've got that very important Infinex conversation to have. Sticking on the entrepreneurial side, though, we've got to do our weekly entrepreneurial sponsored segment, Publish and Profit, where we explain some of the key secrets and tips to making money online as a creator. Today, we focus on one thing that I should have done when I started out as a creator, which is creating with a niche community in mind. This segment is brought to you by Little Nouns, an expansion DAO based on the famous Nouns DAO, who fund cool creative endeavors which can proliferate the Nounish meme. So this is one of the biggest mistakes I think I made as a creator when I started out. I definitely did not focus on creating for one group of people, trying to be everything to everyone rather than being something to anyone. And if you think about it with NFT communities, and I'd be interested to hear your guys' thoughts on this as well. NFT communities should actually really help with this, because by joining one and repping a profile picture, you would think that they would naturally steer you towards one community and almost automatically create a group of early supporters for you. But one of the challenges with this approach, however, is when you commit to one group of people and then the founders do some questionable things or the community goes rogue, you then feel alienated in a group with whom you share few common values anymore. This happened to me with Moonbirds, and to be honest, I never wanted to trust another community with my brand again. So whilst I do think it could be helpful to join one or two communities to get that extra engagement boost when you start, ultimately the better niche communities to create for should be thematic interests like DeFi, consumer crypto, NFT market analysis, Web3 marketing and BD, or topics like that. Even whole chains had creators rise to prominence or propel themselves forward because they attracted hyper attention during a period of time and became the focal point for updates from one ecosystem. People like ICO Beast and Jen being great examples of both written and video creators who crushed it on Blast for a period of time. So those are my thoughts on that. Curious to hear your thoughts, Rahim and Sammy, on how you started out and what you think of joining an NFT community versus creating content with similar themes. Maybe we'll go to Sammy first on this.
Well, I think the NFT community stuff, I think there's a strong value proposition with if you participate in that community, you automatically almost buy into that support. And we've seen that with a lot of projects that want to enter the space, like 9gag, as an example, with Memeland. Like, he bought up in 2021, bought up all these NFT collections, bought their goodwill, participated, and it shows like you've put skin in the game, like you're buying into all these communities, you're showing that you're committed. And actually, as a return, people will support you. And I think that does work really well. I think NFT God, Alex Finn, like he used that with Creeps. So he used Creeps as an example early on. Like, he got really integrated into them. They're a very strong community. He then used that to bootstrap his growth outside. So I think there is an element of, if you join a strong community and you buy into it, then you do get that early support. And if you then produce good content or do things that people resonate with beyond that, I think that helps.
Yeah, I think that's definitely fair. Rahim, I would love to hear your thoughts as a loyalist, a loyal Bored Ape holder from the beginning, I think, at least. How have you felt from the content perspective when you've kind of trying to evaluate how to produce content and for who?
My answer, I think, is going to come off a surprise to you, because I don't think, like, I love the Bored Ape ecosystem. I got into it super early, so I feel like I have an emotional connection to it. But I think my perspective on creating has never been that, oh, I want the Bored Ape community support. Like, it's great if it gets there, but I feel like this is more of me competing with myself, that I want my stuff, my thoughts, and my content to be so valuable that even if you are in one of those anti-Bored Ape communities and you hate it, you're like, you know what? I fuck with this guy. I like what he's saying. So to me, like, I don't really think that. I do agree with you. Like, I think if you're looking to become like a creator, having like a thematic content like helps you kind of like really curate your audience. However, I'm completely the opposite of that. And we've had this talks, B-Check, before. Like, even if you look at my background, I used to be a scientist, then I went to being a filmmaker, and now I'm doing what I'm doing today. So I feel like I'm always someone like, I'm interested in meme coins. I'm also interested in DeFi protocols. I'm also in traditional stuff. I do understand, with me not focusing on like thematic content, that it probably hinders my rate of success or how quickly I can grow, but I'm fine with it. I think it's one of those things you just have to be honest with yourself, that if you are like, you do have goals of really growing yourself and this is your bread and butter and you want to become like a creator and that's what you identify as, then it makes total sense to curate your audience, build credibility in one field. But if you are someone who's like across the board, and like I'm not like a chain maxi, I'm not like a product maxi and stuff, so I'm actually at peace, and maybe it hinders my growth to a bit, but I'm actually more interested in like learning different aspects of it, and I'm quite at peace with it.
I like that, man. That's a really important point on just patience. Like, and also independence, actually, because one of the things that I've always been conscious of is when you start to affiliate too much with either one ecosystem or one NFT community, say you even created a lot for one particular ecosystem, they only share your work if you say positive stuff, right? Like, and then, there might foreseeably be times where they do something that's not as good, or there's a bit more of a challenging moment. It's like, well, what are you going to do? Are you going to call it out? Are you going to say the appropriate thing, given that the eyes are on you, to make some type of commentary? So I think it's challenging to stay independent in this space. And maybe it's easier when you have a few different relationships and interests across the board, because you can always then fall back on others. But I thought that would be an interesting conversation to bring up for people, because in the end, yes, you can go all in on stuff. Yes, it might help certain times, but if you're patient and if you want to try and maintain some independence, ultimately, I think you will have to broaden out and in order to maintain that. So interesting conversation. Glad I could have it. Go on, Ryan.
I just want to add like a quick bit to it. This is exactly what Steve was talking about with Coffee with Captain yesterday, about like, when he was critical about like the whole BMW AIP that passed, they were talking about on that Twitter space where he was a bit reluctant because he was like, the ApeCoin DAO kind of funds their show. So should we be doing this? Does it reduce our support from the community in the future? And like they talked about that, but he was like, you know what? I got to be true to myself. And I would hope that people like me for my truth. And I thought like that was super powerful. And it is a hard conversation to have with yourself. But again, you just got to be honest to yourself,
But I think you can also do it in a constructive way, where it's like, okay, well, I have a point of view, but as long as I stick to the facts, I think the people that, whether it's sponsorship or whether it's like a brand association, I think that they should understand. And if they don't understand, unfortunately, I think it's probably the wrong fit.
Yeah, I think that's completely fair. Shout out to Steve and Cap, who I kind of loosely followed their coverage of that that BMW prop as well, and I think they did it in a pretty fair way, you know. And I completely agree. It's something which you have to battle with as a creator, putting yourself out there all the time. But I think that was good coverage. So, look, let's keep it moving because we want to get into the probably the main headline today. I can't tell if this one went under the radar or whether it was in my face the whole time. I want to ask you guys first. Did you guys know about Infinex, Rahim? You were in Singapore though, so you knew. Did you know?
I came across it very briefly, to be honest. It wasn't something I
Even
went deep
Rahim is
into.
brief. Sam, did you know about Infinex?
No, I mean, there wasn't much coverage in Italy, and all I could see was on the timeline. So,
Okay, so but this is my point. Okay, so I'm going to give you the breakdown on what Infinex is, and the reason why everyone should understand what it is. Well, there's a few reasons, some which are obvious and some which are less. So Infinex completed a $65 million raise yesterday or the day before. Showing it on screen, there was this patron sale. There were 100,000 NFTs available. There were 3 tiers that you could buy in at. In fact, I'll go into those details in a second. It was a $65 million raise. Remember, usually when we make these announcements about like pre-seed raises or seed round or whatever, it's usually like so-and-so's raised 5 million, so-and-so's raised 7 million, so-and-so's raised like, you know, not 65. But this was all done from, well, there was a portion that was done from maybe significant investors, and then it was kind of opened up to users of the platform who could mint. So $65 million purely on a numerical basis is a hell of a lot in this environment, I think. And then why did they manage to raise that amount? First, I think first and foremost, I think it's the person. So if you don't know, let me try and share this on screen for people who are watching in as well. I don't know how to spell his name anymore because it's like, I know what his name is, but I don't know how to spell it. Kane from Infinex. So Kane, I just don't know how to spell Kane. Kiene, Kyne, I don't know. So Kane is actually the founder of Synthetics. So I will show you Synthetics. This is one of the OG DeFi.
I've just dropped his name in the chat, so you'll be able to go straight from there.
Thank you so much. Kaiyne. How am I supposed to know that that is how you spell Kane? Okay. Right. So Kane is the founder of Synthetics, which is one of these like old school DeFi protocols. Very, very significant person in the Ethereum ecosystem. Knowing that is obviously helpful, and then starts to make sense when someone is trying to start a new venture, knowing that they've been hyper successful in a previous one. Probably alludes to it a little bit more. There was also on the timeline, if you were in Singapore and if you were paying attention, he was one of the people who was shared in the photo of Vitalik, Stani from Aave. Who else was in the photo? Kane, the guy who runs Athena, Guy, and maybe 1 or 2 others. So there's like this kind of OG little meetup going on in Singapore where these people were coming together to, I guess, discuss ETH and the future of building out on ETH. So that's pretty significant. They had a whole bunch of quite significant investors coming in the first wave of the sale. So that all kind of piques my attention. So I was kind of alive to all of that. And then what actually is it? So that's like why I think it got funded so highly. What actually is it? I'm going to share my screen again to the actual site. This is pretty cool. I signed up immediately and was trying to figure out A, should I invest in this? And B, should I, like, what is it? And should I invest in it basically? Because the sale was still ongoing. So is the way they're kind of pitching it is the easiest way to access the world of DeFi with robust multi-chain support and unrivaled non-custodial security. So I don't know if this is what they would want me to say, but it's kind of is trying to replace the centralized exchange, and it's trying to be a decentralized version of the centralized exchange. It does not require a seed phrase in the way that traditional accounts might get set up. You log in with like a pass key that gets generated on your computer, but then it's all on chain. So when you go and fund your wallet, it's like as fast as when you just fund when I send some money to you from 2 wallets. But it's also got different ecosystems. So it's got the various L2s, it's on mainnet, it's on Solana. So it's actually got like various things all wrapped up in one hub. And I think the intention is for it to also include, like, you can stake your ETH from within there. You can do your lending on Aave from within there. So it's like taking these key protocols around DeFi and ETH, and maybe even on Sol, because it actually had Jito Sol kind of connected to it as well, and bringing it all under one roof. And so this is considered to be an app rather than an infrastructure play. It had investors from the Solana side. It had investors from the ETH side. One of the significant investors was, let me get it here. We've got Mert saying, been hanging out with Kane and the Infinex app chads for a bit now. Finally checked out the platform to buy a patron. So this is those NFTs. It was honestly the smoothest DeFi experience I've seen in crypto yet. Great UI, account management speed, and super snappy user feedback. And that's kind of what I experienced when I signed up and just tried to send some money in and just play around with it. So I did actually end up investing as well. And I bought some of these NFTs. But I thought it would be very important to bring this up because A, it's funded so significantly, B, of who was funding it so significantly, kind of from both sides of the aisle on Solana and on ETH. And just to hear your guys' thoughts, like, what do you think of this idea, this concept? Do you think this is something that's needed? Kind of ties into that conversation we were having previously about how it feels like the end game for a lot of these apps and chains is like to be everywhere. No longer can we just stay on Solana and be on Solana. No longer can we just stay on ETH and be on ETH. We want to be able to attract everyone from everywhere. Sam, would be curious to hear your thoughts first, and then we'll come to Raheem.
Yeah, I mean, I think there's a lot of sort of protocols that are trying to achieve this. You've got Abstract Chain trying to, I mean, it's in the name, you're trying to abstract away this underlying crypto jargon, make it more easy for the average user to understand. I think you've got Polygon, they're pushing the ag layer, so aggregating liquidity. I think this is happening behind the scenes. It's taking a while for it to happen. But I think I've not used this platform or protocol, so I can't talk to this one specifically. But based on what you said, it sounds like things are moving a little bit quicker now, and this seems to be the focus. And similar, another post from Saigar recently saying that soon wallets won't be like MetaMask with seed phrases, like you just won't have that. And that they're ultimately like things like Blast, they're building like a full stack thing. You've got these protocols that are trying to look for the next iteration of crypto, because the average user isn't going to remember a 12-word seed phrase. It's just not going to happen. And I think there is that risk of like security if they try to do that. There'll be a lot of people that get hacked and stuff like that. So I do think that it is the next iteration of how crypto evolves. Whether Infinex will be that leader, I don't know yet. It's too early to tell, I think. But it sounds like they're doing some good stuff. So I think whatever they build, and then whatever these new protocols that come out build, I think there'll be sort of a race to try and get that product market fit and onboard those users in the most seamless way.
I'll tell you what there is a race for. There's a race happening now with founders to figure out how they can get access to the liquidity on the chains that they're not on. Like, I think people have had enough of being siloed in the place that they are, and too much is happening on Solana for you to just be on ETH and be like, cool. You know, if you're a retail-y type of app or product on ETH, too much is happening on Solana for you to not be able to participate in that. And
I think as well, just on that point around Solana, I think I've spoken to a few apps recently that were like, okay, well, do we build on Ton? Or do you build on Solana? And ultimately, the liquidity is actually on Solana. There's a lot of users on Ton and in Telegram, but you can actually build an app in Telegram on Solana. So it's like, well, you can get the best of both worlds there. So it does seem that there's a lot of apps that are coming to market that they're like thinking, okay, well, this is the avenue that I want to go. Like Solana has the liquidity at the moment, especially from the retail standpoint.
I like it. Look, we're getting some questions on the pricing. So I'm going to walk you through it, because I think maybe from the investment perspective, look, as I said, I did end up investing, but just so I can talk through my thinking on it, so people can get a sense of why I did it. Could turn out to be good, could turn out to be bad, but this is how they designed it. It's also interesting from the mechanism, from the way that they pitched this, because it's done quite differently. And actually, in the way that they've brought this to market, they've not actually said that there's going to be a token in the classic way that sometimes you just throw your money into a pool and hope that you get something back. At the moment, this sale is for 100,000 NFTs. 50,000 of them are for the community, and you had 3 options. I'm showing them on screen. The first is that you could go fully liquid, and that would cost you 5,000 for one NFT, which would mean that, in 30 days time after the closing of the sale, you would receive your liquid NFTs. But if you only bought one, you'd receive it at the end. Actually, no, I think for that one, you're fully liquid, but they cost 5,000. The second option was to go linear, which would mean you receive the NFTs that you buy over the course of the 12 months. So it's like a 12-month unlock. If you only bought one, though, you would receive it at the end of the 12 months. If you bought 2, you'd receive one after 6 months and one after 12 months. If you bought 3, you'd go on after 4, 8, and 12, etc., etc. So you unlock slowly. You don't get it right in your hand on day one. The final option is to lock it completely for a year. And you have a 12-month cliff and then a 24-month linear unlock. So if you only bought one of those, although you get a 75% discount, and for the linear one, you got a 40% discount. If you only bought one, you'd receive your first NFT after 3 years, which is, a hell of a long lockup, but you're also getting a 75% discount. My thinking with this was go for linear. Well, liquid's too expensive. I think 5K was expensive. If you think about what FDV they've essentially raised at, they raised $65 million, which represented about 50,000 of the NFTs, which is half of the overall supply, times 65 by 2 to get the overall valuation. So around $130 million FDV, maybe if 10% circulating, that's a 10% market cap. So potentially quite low for this if it plays out properly. I thought 5,000 was maybe just too high to be fully liquid at the start. I thought unlocking as you go would be helpful because I think 2025 will be good for us as a good year to be in the market and to start receiving these back. I didn't like the idea of waiting for 12 months at a minimum before starting to receive them. So I thought the middle option was kind of good here. I think I bought 6. So I'll be receiving 1 every 2 months into through the next year, which I think is a great balance between the investment amount and the regularity with which I'll receive them. Gives me some optionality. Curious for your thoughts, Rahim, whether that's on the product side or on the investment side and how they kind of came to market with this. What are you thinking?
I have a question for you. I remember us briefly talking about this over burgers in Singapore. So I want to understand. So when you're talking about the wallet aspect of it, so that wallet comes under their ecosystem. I'm just trying to understand how much of this is decentralized and how much of this is centralized in terms of tomorrow if the platform goes bust. How does that work with the wallet? The way you funded it, can you import that wallet into it a different thing? How decentralized it is. Do you understand my question?
Kind of, I guess. I think ultimately the answer is I don't know. All I know is that when they say this is on chain, the key difference that I experienced is when you say you're in your decentralized wallet and you send money to your Infinex wallet, it happens in the same speed as when you send it to decentralized wallets. Whereas, when you send it to a centralized exchange, it takes some time, right? Whatever they're doing in the back end in order to allocate it to your wallet, it takes some time. Whereas, so this is decentralized in that respect.
Interesting, because if you take Photon for example on Solana, which kind of works in it's where a lot of the Memecoin stuff happens, where I guess you can buy other stuff as well. You obviously don't have staking options, but it works in similar way where I can send SOL from Phantom to Photon and it comes instantly, and then whenever I need to invest or whatever, I'm literally clicking a button and it does. I don't have to approve any transactions or whatever. But the thing with always that is, if let's say tomorrow Photon ever goes bust, everything that you have on it, what happens to that? And that's where I'm just like, that's like the tricky bit of like centralization and decentralization. Like tomorrow, if you have like an SVF scenario, what's happening from like how much of that money is like liquid? So I'm like still trying to wrap my head around like how much of this is actually like centralized and decentralized and how much value it has. Obviously, like the whole onboarding process, making it quicker makes a lot of sense. I love the fact that they did this through NFTs, because I love that we've reached this point of like mixing DeFi and like meme coins and NFTs into one bundle, and we are experimenting that. I like that, but I'm just like curious to see how like that pans out, because like all of this seems nice and wonderful until it stops working. I was looking at someone's the guy who runs the super team Solana ecosystem in Dubai. He posted a screenshot of how he KYC'd on his Ton wallet, and like they bricked his wallet, where they were like, you've KYC'd with UK credentials, and like it comes under restricted region, so like his wallet is bricked and stuff. So a lot of these like onboarding things sound happy and dandy until they stopped working. So I'm curious to find that out.
Great point, to be fair. I think it was important to bring it up, because it was a significant raise. I think it was important to bring it to people's attention. And then, yes, definitely go and do your further research yourselves and be comfortable with it. We want to keep it moving to get onto the couple of other headlines for today. I'll just address one potentially funny question on the YouTube comments from E. Brink, who asked, what purpose do these NFTs serve? This question was asked many times in the Discord, which I observed, and they all received the same answer, which I believe would be the legal and compliant answer, which is they are limited edition digital collectibles. That is it. So do we think they're going to become more liquid in some way at some point in time, and that's why people put $65 million into it? Maybe. But for now, they're just limited edition digital collectibles. Look, let's keep it moving. I hope that was an interesting little breakdown for you. I think it was worth getting into that because a lot of people have been talking about it. A lot of people invested in it. Let's get into the meme coin conversation, because Rahim, I know you will be probably quite excited about that. I've got the biggest, I've got the meme coin category here open, and we've just had huge moves across the board taking place. We've got Pepe up almost 8%, Whiff up 12%, up to $2.2. Popcat over $1, up another 3%. Mog up 16% in the last 24 hours. We had some other big movers. Where are they? We've got Cat up 10%, Mother up 40%. I'm sure it was up 30% when I wrote the snapshot this morning. What's going on here, Rahim? What are you thinking? Obviously, majors have been strong in the last few days and weeks, but kind of staying steady. What are your thoughts on the meme side?
You remember the last time I was on the show, we were talking about like higher lows and what was it? Higher lows.
Lower highs and lower lows.
Lower lows, yeah. And we just like spoke about basically like, I think like memes had kind of oversold on a bit of chopping that had happened over the summer. And like I was like, my thesis was that I think like when things pick up, you'll see like a lot of this like meme coin mania come back. And we're kind of starting to see now with like a lot of the coins that you mentioned. I think a lot of the big catalysts also came from this like whole Moondeng thing, which has like been taken all over the timeline. To be honest, it's very interesting. I think I haven't seen like a meme that has been covered by Walmart, Microsoft, UFC, Sephora, and like literally it's been like all over like different forms of like industries, all the way from like fast food to tech industries. And you had like the official X account tweeted, and then like I shared today, apparently on TikTok they are doing like makeups inspired by the color theme of the hippo and stuff. So I think it's just very fascinating to see, because like this meme came out of TikTok, which is something we haven't seen in a while. I feel like all this like other memes we're talking about, whether it's like Mickey and like Whiff or whatever, like it kind of like natively the content came out from Twitter, but like a lot of like the noise we are seeing coming out of like TikTok. And I think that's just like fascinating, that I wonder if this is like the catalyst of maybe like a lot of like normies or Gen Zs kind of like looking into all these like new coins, because we've dabbled into like a very different category of like these coins where you have like Giga Chat and NPC and all of these terms which are like Gen Z terms. And I feel like we didn't see them before. All the meme coins were like animal coins that went high in like the last cycle. Now you're seeing these like culture terms that Gen Z uses turning into meme coins. So I think it's like definitely fascinating. I do think like everyone's gambling nature is just going to go higher and higher. Like just like even what like Ansem posted, maybe you want to share that tweet. I think like that has like a lot of value in my opinion about like what he was talking about.
Yeah, I'll just share that because I think that's one of the things where people are wondering like, oh, are we topping? Is this meme coin action? When's it going to end? And I guess his position, and which what you're referring to, is something like this. He says, gambling is in a super cycle trend because of the increasing gap between wages and cost of living, not because someone with a Twitter account did some pseudo analysis on meme coins. Trading is a skill-based game that you can get good at, and crypto is currently the best avenue for that. I've been thinking about this a lot, and I've reluctantly concluding that I think that's probably correct. Like and it doesn't mean that necessarily all the meme coins will go super high. It's just this is one avenue where people can continue to express that type of bet that they want to put on.
But I mean, like you're seeing this like across the board, right? I was having this discussion yesterday. The rise in podcasts in the last 2 years have gone up. Like there are 100 million more listeners to podcasts in the last 2 years. And this came from a discussion because someone in a group was talking about that he doesn't think that because of Gen Z's small attention span, people are looking into podcasts and doing a lot of podcasts. And I was like, no, if you actually look at data, podcasts are the highest that they've ever been. And I think it goes back to like Ansem's post that I think a lot of the younger generation is finding different digital avenues, whether it's creating, whether it's esports, whether it's gambling, to kind of make that money because like the tweet said, it's like really hard for someone to make a living owning a house. You add the whole AI element to it, the amount of people that are going to be like losing jobs and companies that are going to like start like downsizing. And now you have another layer of people being like, okay, clearly this is not working out. I went to college. I'm doing all of this. I'm not able to like provide for my like basic necessities. I'm going to resort to gambling. Probably not like a healthy thought to have, but yeah, I think like the more we come up with tools like Pump Fund and a lot of these easier onboarding tools where like retail can meme coin and just like gamble their stuff. I do think gambling apps, stuff like Polymarket with like sports betting and like, you know, like when you look at like UFC betting and like meme coins can go absolutely berserk on that idea.
Yeah. Okay. I think that's a pretty, yeah, it's we're clearly in trend there. And I think it's probably on the rise. Look, we've only just got a minute or so left. Just want to give you the final headline and then go to Sam for a reflection on this. Is probably up his street a little more. Thought this was very important actually. This came from PayPal where they said that they are now going to be offering crypto to their companies. Company also provides the ability for business accounts to externally transfer crypto, whereas before this was just for consumers. They said, since we launched the ability for PayPal and Venmo consumers to buy, sell, and hold crypto in their wallets, we've learned a lot about how they want to use their crypto. This was the senior vice president at PayPal senior vice president of blockchain and crypto. He said, business owners have increasingly expressed a desire for the same cryptocurrency capabilities available to consumers. We're excited to meet that demand. So clearly demand on the business side of transacting and moving crypto around. Sammy, what do you kind of place significance to this?
Well, I think so. PayPal has about 35 million merchants. So if you think about the fact that they can now access crypto through PayPal, that's pretty impressive as a plugin. And we talked about UX improving. I think them plugging that into the business, into those individual businesses is incredibly powerful. Now I know that Solana's been plugged in with the PYUSD stablecoin. I think there's 2x the number of stablecoin being issued on Solana versus ETH. Now Solana's also integrated into Shopify, which I think had about 4 million merchants. So if you think about PayPal in terms of the scale, it's like 10 times the amount of Shopify, and Shopify is a huge company. So yeah, I think it's an incredibly powerful thing. I don't know if it's going to change things overnight, but I think over time, as these individual merchants start to adopt it or start to integrate it more into their business, I think that's going to be a powerful thing. But yeah, I don't think it's going to happen overnight.
Sure. I think that's the point, though. They're just kind of like responding to demand. There's sufficient demand for them to feel like they need to make that change. Appreciate your thoughts there, Sammy. Appreciate your thoughts, as always, Rahim, on the variety of topics we got into today. But guys, that is our show for today. We hope you enjoyed it. Remember, we do this every single day, Monday to Friday at 7 a.m. Eastern time for 1 hour. We're live on X Spaces, X Video, and YouTube. We also post to Spotify and Apple Podcasts if you want to catch up with your audio and video over there. Thank you so much for joining us today. We will be back with you tomorrow. Have a wonderful day. Take care, and we will see you tomorrow. Bye-bye.